All right, everybody, welcome back into a new weekly high time frame analysis plus the next week weekly outlook. We're going to have an overview of our equities dollar index, volatility index for the US dollar in order to then understand better what we can expect from the gold versus dollar and euro versus dollar. And of course, we're going to see the economic events from the coming week. As we can see from the higher time frame point of view, if we look at the here on the VIX, the volatility S&P 500 index, we can see that, of course, starting from the start of the pandemic, where the fear was at its highest, around 80, we had, of course, a decline of fear, uncertainty, and doubt in the markets. As soon as the Fed started printing money, as soon as stimulus was given, remember, this is not just, this is from an economic point of view. So investors, when this is the fear part, fear increasing, uncertainty about the lockdown, about the pandemic, is it deadly, is it not deadly, and this is the fading of the fear due to the very strong economic stimulus given by the Fed. As you can see, we have this maximum, this all-time high, and then we had, of course, some bounces, some minor pullbacks around June for maybe the fear of the second wave or anything. And apart from some smaller and smaller and smaller and smaller, as you can see, spikes, the fear, as you can see here, every time the spikes were smaller in size. So if you look at now, when it goes to 20, you think, okay, fear mode is activated. But if you compare to the fear that was for the pandemic, it's nothing. So this is good to know that over the last year and a half, almost 2 years, we had a very, very strong decline in the fear, uncertainty, and doubt, which is the amount, in very simple terms, is the amount of money people take out from the stock market because they don't want to risk it. So to put it into safe havens, precious metals, etc. US 30, the Wall Street Index, as you can see, we had, of course, in February, March, a very huge decline. But as you can see, the same. It was already declining, dropping at the first signs of the pandemic, not even lockdown. Very sketchy because the lockdowns were around here. But then as soon as the Fed started printing money and boosting and putting the money into the stock market to avoid a complete crash, stock market pumped and boomed from these previous lows at 18 back to all-time highs at 35.5, as you can see, very clear. As you can see, the drop below significant levels were already around the start of the pandemic, as a pandemic. Let's go on the dollar index. As you can see here, at the start of the pandemic, we had dollar increasing as a safe haven currency. So probably the investors that put money out of the stock market invested in dollar as a world reserve currency. But then as soon as the Fed started printing money and giving out very, very huge amount of stimulus, the currency, of course, as per simpler supply and demand law, gets depreciated when the supply is heavily increased and the demand is the same or even less. And of course, we saw the same on gold, and we saw the same in USD. On USD, you can see here, as soon as dollar gets weakened, we start to have more value in the euro-dollar. Bitcoin will be the last one because it will be only technical. So let's see for the dollar index. Let's go into a more recent times. So we reacted when the tapering talks were huge. Start of the year, when the start of the rebounding of the labor market, we started to see what is happened here actually. Sorry. This was when the inflation and the labor market was not rebounding, with unemployment still high and very, very high unemployment claims due to the stimulus being printed. So further stimulus. So let me just write it down. Continuous stimulus and QE. Taper talks and interest rate hikes delayed due to unemployment rate high, jobless claims high, NFP low, because there was not a high supply of jobs yet, which brought by depreciation. Here, the opposite happened in the last period. Here, as you can see, starting from June until now, when we reacted to these previous highs, when we had actually the opposite happened. Tapering talks, interest rate hikes, talks, unemployment decrease, NFP / job supply increase, appreciation. Okay, as you can see here, but as we know, this was just pricing in, because this is only tapering talks. This is the interest rate hike talks. There's no action, there's no timeline yet. And this is because, yes, the economy is rebounding, but there is still not the sort of Fed approval. The Fed talk that explicitly say from September, October, November, we're going to start tapering. And from Fed, I mean Powell, because all the other members of the Fed are willing to start tapering. The only one who is not yet convinced is Jerome Powell. Very, very dovish speech last Friday. So now we are here, and exactly as you can see, reaction at previous highs, dollar weakness due to delayed taper talks from Powell. And of course, September, and this is very important because investors are sort of expecting September as the FOMC conference or Fed speech to be the date of where they announce the tapering program. Of course, what we might expect in the near future, we have at the end of this week, we have the NFP. So this week for the US dollar, we have some consumer confidence, yes. We have ADP on Wednesday, which is the private sector. We have some PMI, but of course, we have the non-farm payroll of last month, of August, because we'll be in September. We will have the U6 unemployment rate. We will have the regular unemployment rate. And some ISM. Friday will be very, very dense of news. And we can expect here, if we get continuous weakness, bouncing at this previous low, and then we have nice, good news from the NFP, we can see a bounce, make up, and giving short-term strength. Why? Because the eyes of the Fed are on exactly on the non-farm payroll, on the unemployment rate. They are on the job and labor market. So this is why if the numbers are good, we can have a spike up. But of course, if the NFP unemployment shows weakness, then we can go and retest these previous lows on the left-hand side. I personally expect that the economy, due to the reopening and the rebounding, we will have good numbers, so we can expect short-term strength in the dollar. Of course, good numbers will give more possibility for the tapering happening in September, and then a good, positive and hawkish announcement from the Fed. Let's go on gold. As you can see, we have the same news coming up, which is gold is very, very sensitive to. On a daily time frame, we can absolutely see the bearish downtrend starting from August 2020, when the fear started to fade from the markets, from the economy, due to the positivity from the possible vaccinations, possible vaccine coming out in the upcoming months, and the fact that economy could work with the pandemic, the lockdown was not complete anymore. As you can see, investors started selling gold to buy dollar with short-term rebounds. But as you can see here, in 1680, we had our make or break point, was the last of the block low, but most importantly, here, from here, we started to see a heavy correction, heavy pullback due to the higher inflation. Inflation, which gold is used against due to the safe haven, precious metal nature of the gold. Here is end of lockdowns. Since then, we saw a rebound due to the economy reopening, labor market rebounding here, plus paper talks, which was very present in the headlines. We had a market maker moves. At exactly the previous lows, and then we are now in this corrective phase of gold bullish due to the delayed taper talks. Okay, so this is the outlook of gold, but what can we expect from gold in the upcoming week? Here, if we go deeper on the 4-hour time frame, as you can see, we created bullish trend. We are creating new highs, but look on the left. What do we have? We have around 1830. We have this big price sensitivity area, 3031 price sensitivity area, which can give reaction and possible a possible rejection. And otherwise, we can have a uptrend to sort of try to revisit those previous highs. But what I see as a possibility in the future, we also have this price sensitivity area, we have this price sensitivity area. What we might see, in my opinion, is that here we can continue bullish up until 1830, but then this is a make or break point, because if we have good NFP figures, good unemployment figures, more Fed speakers talking about taper in Q4 2021. We can have a rebound of gold. I can only see an uptrend again if we see NFP supply of job not as expected, unemployment rate increase, labor force participation decrease, uncertainty of tapering timeline. This is what I see on gold. This reaction at this previous highs, 1836-ish key level. Unemployment, tapering timeline. We don't have any CPI news for the US dollar, right? No, yeah, for the euro. Exactly, we don't have any CPI. So I wouldn't take inflation into account for this week. But of course, we still have this price point very, very strong. 1720, sorry, this one, 1680 is the make or break point. Come on, mouse, okay. Okay. Okay, this is for gold. Just give me a second. Here I am, and as you can see, now we're going to do EuroDollar, which is pretty much the same. The only difference is that it doesn't react to inflation or to some data as much as it does gold, but is of course more related to the value of the currency, depreciation, appreciation of the dollar. So as we saw here on the DXY, if we see a reaction here due to and then on the upside due to good numbers, then of course we will see euro dollar dropping, and we can outline, we can put some price sensitivity areas here, and it's of course on a daily. So let's see in what, of course, from the beginning of 2021 with pullbacks during April, May, we are still in a bearish trend, less steep than on gold, but still indeed in a bearish trend. Let's go, and of course we are reacting. We have this price sensitivity area, which is like the 1680 on gold. This is there, 1.1625, 20, 30. Let's go on the 4-hour time frame. Exactly, as you can see here, is less steep than, because we have this heavy pullback in March, but it's still, we can, if you want to connect more dots, 1, 2, 3, 4 more dots, we can put it this way, but of course since it's a currency, the slope is less steep. On the 4-hour time frame, what we can see and expect from the next week. As already said, we have this price sensitivity area, 1.17, has been broken but immediately rejected this week. As you can see, it's a strong point. We can go in a little deep below, and the 16, yeah, 1.16 flat. Okay, sort of, yeah. But on the 4-hour time frame, we have this very aggressive late recent bearish trend, as you can see. due to the same reasons of gold. So tapering talks, economy booming, possible supply of USD limited, higher demand, higher price, higher value of the currency dollar. That's why it went bearish, but it is all rising in the taper. Now, the more we know about when we are going to have the taper, when the interest rate hikes will be, the more we will have a clear direction of the trend. You can see here, we're in a bullish trend. We are reacting at these previous highs around 1.18. The next price sensitivity area on the left is around 1.19 and 19 something. Of course, to get to these levels, 1.21 or even 1.22, 1.5, we only have to have a really, really depreciated currency. So what I'm expecting from the week ahead, so we are here, we can retest those previous highs on the left until Friday, or even deeper here. But then the same reasons here for the bullish euro, and the same reasons for bearish euro. Only difference is that this week we also have some news regarding the euro zone. Let's go and see them. So we have on Monday, we start with the consumer confidence, as you can see. Consumer prices and CPI. Consumer prices for the Germany, but also CPI/inflation for the Eurozone, expected to be higher than previous, a lot higher than last year. And unemployment rate for Germany. Germany is the biggest economy in Europe. Then we have the retail sales of Germany and the Eurozone unemployment rate, which is expected to be a little bit lower, and the retail sales of the whole Eurozone. These are the same reports that we see from gold/dollar, just applied to the Eurozone. So let's mark them up. Here, so we can have good consumer confidence. In these cases, I'm a little bit, I have doubt. CPI decrease, retail sales increase, or CPI also, even if same and the retail sales increase, CPI decrease and retail sales increase, bad NFP number, let me just, okay, decrease in unemployment, and that's it. Then bad NFP numbers, bad US unemployment numbers. In red, we have the opposite. Worse consumer confidence, high CPI, and decrease in retail sales, which will mean that the CPI is affecting the retail sales. Good NFP numbers, good unemployment rate. This is okay. Doesn't matter. Okay, let me make sure I didn't miss anything. CPI, unemployment, retail sales. Okay, very good. And this is the outlook for EuroDollar. Okay, and now we're going on our last pair, which is Bitcoin. Bitcoin, we're going to analyze it only on the on a technical standpoint because of news. If you go, it's funny, it's interesting, because if you go and look for the news on cryptos, it's very funny that all the news are about the price. Testing the price, price resumes. There's no real data unless there is Elon Musk talking. There's no real data and news headlines about them. So, of course, apart from technology advances or limitation. So let's start on the high time frame, on the daily time frame. Of course, we had the bullish run from the 2020, coming to the all-time highs around 64K, and then we saw making new lows, new lower high, and then a deeper correction from these all-time highs to then bounce at 30,000 key level and price, very important psychological price point. This for them is a crash, and there are sort of those people expecting another sort of crash up until 40K and then up. But as you saw in last week high time frame analysis for Bitcoin, if we zoom out, if we go on the weekly to clean a little bit, as you can see, yes, we made, so we had the first impulse, then nothing, then the mainstream, the Bitcoin is coming into the mainstream, bullish run, correction. Now people is buying the dip and thinking about that now from here it will immediately skyrocket to 90-100K. But if this Bitcoin is becoming institutionalized exactly like any other commodity or asset, then we can see that price fails to break above these previous highs and then gets a deeper correction, profit taking, then around 20K, you can see support being created and then continuation up, but also might be like any other commodity that the slope could be much less steep. When the hype is less, when it becomes a more institutionalized asset. Let's go back on the 4 hour now to see what we can expect from next week. So after the bounce of 30K, we saw a very, very kind of strong bullish run with investors buying the dip, as I explained. We had some minor resistances and pullbacks around 40K, 44K. 44K is our last price point if you follow my daily analysis. And then we are now finding support at 47K. 44K is still the last very important higher low, which was respected and was the base from the last impulsive high. Not yet 47, because if you see 47 is the same that happened here. We can then have another, create a double bottom and continue up to our resistances on the left hand side, or we can, if we don't repeat what happened at 44, this same repetition, we can have that this is not a higher low, but it's just a pullback. It's actually a lower low if then price makes new lows and go back down. Because if you see it, last higher low coming from the high, new higher high. Yes, this might be a new higher low if this becomes a new uptrend. But if we see that here price drops, what are we seeing is, let me chart it up, higher high, higher high, higher low. But then if you follow the price, we have lower low, lower high, lower low, lower high. So that this is a shift in the market structure based on price points, not based on the time on the trend line. So this is very important to understand, to see what price, where price needs to be in the upcoming future. But let me just give me a second. Here I am. But let's go a little bit zooming in on the last price action. Here we can go on the hourly time frame. It's a little bit messier, but as you can see, it's very clear that our last price point of interest is the 44 after making multiple rejection and being the last price point that brought us to new highs. Where are we now? We have this 5,500 key level, price sensitivity area that needs to be broken if we want to continue up. But as you can see, we are already starting to see a correction. Yes, it was broken here, this bearish trend, but as you can see from, yes, a trend line, but as you can see, last high, lower low, lower high, lower low, lower high, lower low. This, where are we now? We are still at these highs. Yes, we had a fake out, but as you can see, we are breaking below. So what might happen is that, yes, we can identify bullish trend, bearish trend, lower high, but here we are at a sort of make or break point, because we are still at these previous highs. This is the last lower high, and is not last lower low. This is not broken yet. That's why the outlook is, if we want to see it, we can have a deeper correction if we go below 48. And we can take advantage eventually of all this range with possibility to even extend for price to go and revisit the previous lows at 44. You see that below this level, below 46.80/47, as someone would say, we have clean traffic on the left. There's nothing. We can say that, yes, safer below these previous weeks, but it's really, really clean below that. Let me just fix this. Here. And of course, on the opposite side, if we see that the price breaks above this previous high and definitely creates a new higher high, created, then we can see a shift, and we can see that we can go and revisit these previous highs on the left, and eventually even higher if we break above. It is very important to clearly clean this positivity area. As you can see, the range is much higher, much bigger on the downside than on the upside. But of course, let me just fix one thing. Okay. But if we zoom out on the upside, especially on the 4-hour, it's more clear. We are at this price sensitivity area on the left-hand side. And the real range, if we break above, is up until 60K. So it is 1,000 pips to go on the upside if we break above, as well. As you can see, 44K, there's not much. if we consider it. Okay. 60K above this level. $38, $44. So of course we have, if we break above, we have this range. If we break below, here we have this range and potentially this range as per intraday time frame. Okay, so guys, this is it for our high time frame analysis for gold, Bitcoin, euro dollar. We saw dollar index, we saw the VIX, we saw the stock market. See you next time.